In a perfect world, I wish I had 100 companies to invest in that have the same parameters of Alibaba and PayPal. And I'm going to share my thoughts on why I think that. So company number one, Alibaba. Guys, look at this. All-time high around 310. It has just plummeted from there, keeps going down. Now, sub 100, a lot of value investors have gotten very interested in this, some big value investors. But why is it down so much? Geopolitical. I think everybody's just so worried about China. And I don't blame them. China is a concern right now. But I want to ask this question. Where do you see China in 10 or 20 years? Do you see it being a bigger country with GDP per capita growth, wealthier people, or do you see it being poorer? You know, I hear the examples of Japan, but remember, Japan in the 80s was still a pretty wealthy country overall with its citizens, high per capita earnings, etc. China's still in infancy. A recession to China is still 4 or 5% GDP growth every year. China is a different situation. Are there concerns? Yes. Do they still have their communist regime going? Yes. But they have Hong Kong, and guess what? I have a secret for you. Communists love money. They might love money more than capitalists. And Alibaba is a great company in a growing economy. Are there issues? Yes. But remember, the issues that we always hear just fade away. For a while there was ADRs. Oh, you don't really own the company. And it's like, well, but that was the same case up here. That's the same case it is with a lot of foreign companies. I'm okay with those risks. The question, are you? I look at this company. What are the 8 pillars telling me? The story. Well, we have 6 check marks. Low return on invested capital. That is a concern of mine, but I wonder if it has to do with their growth and things like that kind of sway the return on invested capital down. And this net income is down $9.5 billion. I think they just had a write-off because look at this, guys. Let's look at their cash flow statement. In the last year, their cash flow was $20 billion. 22 the year before, 12 the year before that, 25, 19. Do you see what I mean here? The earnings and the free cash flow aren't lining up, but the free cash flow is higher. That is a good thing. A company that generates $20 billion in free cash flow and has a market cap of $188 billion. That's 9 times free cash flow. Whoop, whoop. That is incredible. Now, they just announced a dividend, which I think is absolutely asinine and stupid, but they did it because people are whores and love it. In my opinion, buy back your shares. Take 100% of your free cash flow that you're not reinvesting in the business and buy back your 9 times free cash flow. The good news is they are buying back shares. They keep increasing their share repurchase, and I think that's wonderful because eventually it will lead to better earnings per share. And look at this. These earnings per share by analysts aren't great. I don't know why they have these kind of numbers here. Okay. I'd be very surprised if 6-7 years from now, the company's only making $9.83 per share in earnings per share. What's the reason? I don't know. But these 3 analysts here have pretty negative future for the company. That's fine by me. Because look at the revenue growth. That's what's incredible. $130 to $170 billion in revenue. It's kind of hard for me to sit there and see a company grow, what is that, 38 billion? Sorry, 38 billion on 130. That's 30% growth over the next 5 or 6 years, but also have a very little profit growth, especially when they're buying back shares. But it could happen. You know, Charlie Munger says it was the biggest mistake he made, not because the stock went down, because he thought it was more of a tech play than it actually was. I think he's right. I don't think it's a tech play. This is a company that's the Amazon of the rest of the world, and we've used it for 10 or 12 years to buy products from China. We use it now to buy products from other parts of the world, and we love the service. But remember, this is not for the faint of heart. There's a lot of negativity in this company. That is exactly why the stock is so cheap. My hope is that eventually this turns itself around, and at some point, the momentum starts to shift on Alibaba. What's that going to take? I have no idea. But if you're a buyer of a company at X price and it goes lower and the fundamentals are still the same or better, what are you supposed to do? It's hard, but you're supposed to sit there and buy more of it. And that's what I'm trying to teach on this channel. How do you sit there and manage the emotions with the fundamentals? Because investing, successful investing, is really about managing your emotions. And that's why we have the software in the community. And guys, you probably have noticed that we have a waiting list for our Everything Money software and community. And the reason for that is that the software as it exists today includes everything we have to offer for stocks, retirement, and real estate. As you see right here, these are all the tools we offer right now. And behind the scenes though, we are making some major changes. So in a short period of time, the offer of everything being involved has to go away. As we've been getting feedback from our customers, people want us to focus on one thing and allow them to pick the things that matter to them most. They don't want the Cheesecake Factory 85 pages of options. Now, if you've been with us for a long time, you'll probably remember I built this software for myself selfishly so that I could use it, my team could use it. But over time, what started to happen? People were asking, how do I get the software? How do I get the software? So we decided to finally make it. We wanted to be able to make the right investments for stocks, real estate, and make the right decisions for ourselves. And people saw that. But as we've grown, it obviously has to become way less about me and more about how I can serve our community better, which is why we're updating our software to give exactly what you decide that you need. Now, the good news is we have not made those changes yet. So if you click the link in the description below and join our software or get on the wait list, you'll be grandfathered in for life getting everything in this because this is the best deal we're ever going to offer. I'm telling you this now because there's still time for you to get that. And as long as you join the EM community before we make these changes, you will have all of these options forever. So again, click in the description below, click that link, get access to everything we have to offer for our exclusive communities and all these tools that we have available to help you make the best decision you have made in a very long time. So what's Alibaba worth to us today? Let's go pull this bad boy up in our stock analyzer tool. The last time I did this was back on April 23rd. Now, guys, I did a 10-year analysis. I did 3, 6, and 9% revenue growth. Profit margin, let's focus on free cash flow. I did 17, 22, and 27. PE, I did 16, 18, and 20. And I understand, guys, if you're like, that's too high, it's China. But I would encourage you to put that in your desired return. I'm putting 9 or 10% in to get a kind of intrinsic value for the company, but you need to put margin of safety because the future's unknown. We're humans, we make mistakes, and valuation is an art, it's not a science. So you need to have margin of safety in here, which means you need a higher desired return than 9%. But that's why when you use the software, you can put whatever you want in. Hit the analyze button. Guys, today I have the stock worth a low price of 120 to 140, high price of 350 to 400, middle price of 200 to 250. I mean, guys, I hope I'm right on this one because if I am, it's going to be a killer for me. I think in this situation, the risk is worth this potential upside. Now, stock number 2, PayPal. PayPal is another company that has been increasing in its popularity amongst value investors. I believe it's one of the most written about company in the Value Investors Club. Another company that's fallen precipitously, a high of 310 back in July of 2021. Nothing could go wrong for PayPal. This is the leader of the company. Oh, this is incredible. Guys, they have Venmo. They have Venmo. Venmo is a verb now. Nobody says cash at me. People say Venmo me. Even when you say it for somebody who wants Zelle, you say Venmo me. I have Zelle. Okay, I'll send you on Zelle. That's the difference of Venmo. Now, does PayPal have problems? Yeah. The number of users they have has declined. But the number of transactions and the value of those transactions are up significantly per user. And that's a very big benefit for PayPal. So yes, they are losing accounts, but the per transaction amount per user has more than made up for that. So here's the data on users per quarter. And as you can tell, this dark blue is the growth rate and it's declined below 0. It is not something I like. I'd rather have them have increasing number of users, but number of transactions by PayPal still at more than double-digit amounts. Look at this chart. Keeps growing. I like seeing that. So number of users declining, number of transactions, not even up a little bit. This is 12 to 13%. This is a lot. And this is good. And again, the value of these transactions keeps increasing. This is getting closer to 20% growth right here. That is awesome. I look at this saying, okay, yes, it's not ideal, but remember, no company is ever perfect. And in fact, for a company to be selling at such a discount to its all-time high, there's got to be a reason for that. There's got to be some negative story behind it. The question is, where are the fundamentals in the story different? Where is the market not seeing something you're seeing? I hope I'm right on this as well, and I'll show you why. So here are the here are the 8 pillars to this company first. 8 check marks. But remember, guys, the 8 pillars are so valuable because it tells you a story. It's not about making a decision based on 8 check marks. 8 check marks doesn't mean much. It's about telling the story. Cash flow, up. Net income, up. Return on invested capital, decent. Buying back some shares, great. Low debt amount. I look at this saying, is this the kind of company that is dying that people have been saying about PayPal? Does this match the media story out there, the perception out there? That's what makes investing difficult. Is sitting there and looking at this going, wait a second, this looks pretty good. 13.5 times free cash flow? They have more free cash flow than earnings. And that's what I love about it. All right, so what are analysts saying? Guys, almost doubling their earnings per share from $4.29 to $8.15 in the next 4 years. That's incredible. This dying company is going to double its earnings per share. According to analysts, this dying company is going to increase their revenue by 50% over the next 4 or 5 years. Again, they're analysts. They have their biases. But at the same point, I look at this saying, okay, I use PayPal more and more. Whenever I want to save transaction, I use PayPal. I love using Venmo. Absolutely love using Venmo. It is easy for me, and I love doing it every single day. So what's PayPal worth to us? Well, again, not including its balance sheet, the stock analyzer tool is so useful for exactly that reason. So revenue growth, I did 4, 7, and 10%. I'm going to focus on free cash flow here because that's the bigger, that's the more important number, and it's significantly higher, which tells me there's a disconnect here between earnings and free cash flow. 16, 20, and 24%. The historical average, or 10-year number is 20%. That's impressive to me. Now, PE, 13, 16, and 19, same with price to free cash flow, and a 9% desired return. Hit the analyze button. I got a low price of 70, high price of 200, middle price of 120. This includes the dividend if they ever pay it. Guys, I wish I had 100 companies like this too. I would buy all of them. I'd love every second of it. Click the description below, join our community, get access to the software. Thank you very much for your time.